This is Nightly Business Report with Bill Griffith and Sue Herrera.
Trade whiplash. Talks hit a snag and stocks move lower. But a White House official says that's not the case, making clear that getting a deal won't be easy.
Concerns intensify. New reports confirm what many investors and business leaders have feared, that the global economy's upward trajectory is changing course.
Holding pattern. The standoff in Washington is causing a number of airline CEOs to hold off on their business plans. Those stories and much more tonight on Nightly Business Report for this Tuesday, January 22nd.
And we do bid you a good evening, everybody, and welcome. Investors were reminded once again today about two major market overhangs, namely trade and global growth. Stocks were lower from the get-go this morning on concerns about growth, especially in China. And then the major averages took another leg down on reports that a trade meeting between the American and Chinese officials scheduled for this week had been canceled. When the White House said the talks will resume at the end of the month, stocks staged a minor comeback, as we've seen so many times before. But at the close, the Dow and the other major indices were still deep in negative territory. The industrial average fell more than 300 points to 24,404. The Nasdaq dropped by 136. The S&P was down 37. Kayla Tausche has more on today's Back and Forth on Trade.
As the U.S. and China work to flesh out their trade truce, an in-person meeting expected to happen in Washington this week will no longer happen, according to two people briefed on those developments. U.S. officials are said to want stronger commitments from China on opening up markets, not stealing U.S. technology, and accountability if China doesn't hold up its end of the bargain. The two countries are still expected to meet next week when China's vice premier will lead a delegation to Washington. National Economic Council Director Larry Kudlow said the focus is still on that meeting and denied others had been planned.
The big meeting that everyone's moving towards will be Vice Premier Liu He's coming at the end of the month, as I think everybody knows. That will be a very important meeting. That will be a principals meeting, and everyone was looking towards that. There were no other intermediate meetings scheduled.
Kudlow acknowledged the difficulty inherent in getting a deal with China, but said he doesn't share that pessimism. And the president, he said, doesn't either. The president on Monday, though, urged China to, quote, do a real deal and stop playing around, after days earlier suggesting talks were going well. The two sides have set a deadline of March 1st to resolve their agreement. Otherwise, the U.S. will put higher tariffs in place. For Nightly Business Report, I'm Kayla Tausche in Washington.
China's trade issues are taking a toll on its economy. According to numbers released by that government, growth slowed to 6.6%. And while that sounds like a decent rate, it was China's slowest pace in 28 years. Eunice Yoon is in Beijing tonight.
China's economy posted its slowest growth in nearly 3 decades. Most economists believe that the economy here will continue to slide even further, with Beijing stimulus measures kicking in only by the second quarter at the earliest and more likely in the second half of the year. 2018 GDP was 6.6%, and growth in the fourth quarter indicated weakening momentum, coming in at 6.4%. Fixed asset investment missed, up 5.9% instead of the 6% that analysts were looking for. Real estate FAI growth slowed. Property is a big driver for the economy and an indicator for future construction activity. One important data point for Beijing policymakers, unemployment. The jobless rate rose to 4.9% for December. Part of that's because of weakness in the export sector. Uncertainty triggered by the threat of U.S. tariffs caused some companies to delay investments and hiring. The Statistics Bureau said that Beijing would continue to introduce new measures to help stabilize the economy while managing the trade war with the U.S. For Nightly Business Report, I'm Eunice Yoon in Beijing.
And slowing growth in China has renewed fears that the global economy is doing the same, and that fear was reflected in a new forecast from the International Monetary Fund, which cut its 2019 outlook to 3.5% growth from 3.7%. The IMF's managing director said the reason why is simple: risks are on the rise.
What changed is the level of risks and the acceleration of the pace at which risks are eventually materializing. If you look at 6 months ago, there were threats, there were concerns, but they were not of a magnitude that we have now. We look now at tariff increases that have taken place and that are beginning to have an impact, however small. We're looking at threats. We're looking at an attempt to resolve it.
Slowing global growth isn't just a concern among investors, but also among business leaders who are meeting in Davos, Switzerland for the World Economic Forum. And that's where Becky Quick is for us tonight.
Attendees at this year's forum are facing lots of issues head on. You've got things like global growth that's really up in question at this point, all kinds of questions about what's happening with trade with China, and the possibility of a U.S. recession, which Ray Dalio told us he thinks could happen sooner rather than later.
There's a significant risk of a recession. You know, is it -1? Right. Is it +1? Okay, so let's not get technical about that too much. There's a high likelihood of a significant slowing in 2020.
And Carlyle Group's David Rubenstein told us that he thinks the government shutdown in the United States could end soon as well.
The members of Congress and the people in the administration know that this is hurting the economy, the shutdown, and they really want to resolve this. And I think there's a real resolve to get it resolved very quickly. So it could be more than a few days, it could be very soon, but it's not going to go on for a month or so, in my view.
We heard from the heads of many multinational companies, including Bank of America and Marriott.
China, too, you've got risks on their economy because of trade.
Yes.
You've got also a shift towards consumerism, which is helpful for us.
We think the consumer is very strong right now, spending a lot on experiences. There's a lot of talk about car sales slowing down or house sales and things like that, but lots going to experiences, dinners and travel and stuff. Very strong.
For a Nightly Business Report, I'm Becky Quick in Davos.
Brian Nick joins us now to talk more about slowing growth, China, and all those things that are hanging over the market right now. He's the chief investment strategist at Nuveen. Brian, good to see you. Thanks for joining us tonight.
Thanks for having me.
My old friend Larry Kudlow is still adamant that the economy is strong. You just heard that from the CEO of Bank of America as well. But you have to believe that if China is slowing down, the rest of us are going to have to slow down at some point. Don't you agree?
Yeah, the U.S. is actually a little bit less exposed to a slowdown in China than some other countries are. Obviously, in and around China, East Asia, Europe has a big customer base in China, so they're more immediately exposed than we are, and we're seeing that evidence. European data has been quite weak. In addition to Chinese data, U.S. data has been okay to the extent we're getting data during the government shutdown. But clearly, if China experiences a more abrupt slowdown than it already has, it's going to be very difficult for investors and for U.S. growth to really do anything but what it's been doing, which is slowing down.
We've been talking a lot on our program about trade, about the lack of an agreement between the U.S. and China. Now we hear that meetings are being postponed, but maybe will be rescheduled. What impact do you ultimately think that will have on the economy?
This is something that it seemed like the markets were ignoring in 2019. The market was sort of kind of moving up every day. And this is the first day where we got a little bit of bad news or shaky news on trade. And we were reminded that, oh, yes, we have this March 1st deadline, beyond which, if it's not extended, taxes on Chinese imports go from 10%, if they're being taxed at 10% now, to 25%. And that has a pretty big impact on both our economy and on China. So as that risk grows, as we approach March 1st without a deal, this starts to become a bit more of a concern for the markets. That said, the comments from the White House, to the extent they want a deal, they're going to be having high-level talks next week. I actually think if there's a silver lining to the government shutdown, it's probably that a deal with China is more likely, because the administration probably doesn't want to fight those two fights at the same time, not having a deal with China and also not having the government open. So if the administration wants a deal, it'll get a deal with China. It just may not be the comprehensive, sort of far-reaching, far-looking deal that they may have wanted at the outset.
Where do you rank Brexit in all of this right now?
There's a huge amount of uncertainty about Brexit because there's really no plan for what the UK is going to be doing on March 29th when it's set to leave the European Union. A few weeks ago, we would have said it's very likely there's going to be a deal that muddles through at the last minute. At this point, I think it's actually more likely than not that they're going to have to delay that deadline, that they're going to have to revoke the Article 50 declaration that put the Brexit date into place, and they're going to have to sort of continue to muddle through for a deal that can pass Parliament and or a second referendum, which has become more likely, although we still don't think it should be considered the base case. We really think that it's going to take more time for them to develop a deal that can both pass Parliament and that will be acceptable to the European Union, and the Europeans will give them the extension because they want a softer Brexit too. Very quickly, though, if they do extend Article 50, does that not continue the uncertainty? It absolutely does, but it probably makes the, if the crashing out scenario, the no deal scenario where the UK just leaves on that date and there's no plan in place for trade or customs or border enforcement, if it takes that scenario off the table, removes the worst case scenario for the UK and Eurozone economy and for global markets, that probably is on net a good thing, even if it creates more uncertainty heading into the future.
Brian Nick with Nuveen again. Thanks for joining us tonight.
Thanks for having me.
To the U.S. economy now and housing, which saw a much larger than expected drop in home sales in December. That has economists wondering if there's something new troubling home buyers. Diana Olick explains.
December is usually the slowest month for the housing market, but it was particularly slow in 2018. Not only was the drop in home sales larger than expected, it was an unusually large monthly move regardless of direction. Sales fell 6.4%, and that's seasonally adjusted. These closings were deals made in October, so it had nothing to do with the government shutdown, nor did stock market volatility play much of a role in it.
Normally, month-to-month sales change is not this magnitude. To see such a large magnitude, usually there are some special factors like new consumer protection, mortgage disclosure rule, or maybe tax credit expiration. But the latest decline is harder to explain.
Mortgage rates did rise in September and October before starting to fall again in November, so affordability was likely a factor. The median home price for all of 2018 came in at $259,100. That is the highest price on record.
So what we're seeing is really a response from what had been a spike in rates. Consumers' concern that prices have escalated to where there's fear that they might be the last one to buy or buy at the top of the market.
And that's where consumer sentiment comes in. The gains in home prices had been shrinking for much of last year, and prices had even gone negative in parts of the West, especially California. It may be that some consumers were afraid to buy a home that could soon be worth less than they paid for it. For Nightly Business Report, I'm Diana Olick in Washington.
And not surprisingly, that drop in the sales of existing homes rippled through the sector today. It sent shares of the major home builders all lower.
It is time to take a look at some of today's upgrades and downgrades. Nike was downgraded to outperform from market perform at Cowen. The analyst says its product lineup for 2019 should increase company profits. The price target is $90. The shares were up a fraction to $80.75. Under Armour was upgraded to conviction buy from neutral at Goldman Sachs. The analyst says the company should benefit from strong consumer spending. The price target is $28, but the stock fell a fraction to $20.48.
Goldman Sachs also downgraded the Gap to sell from neutral, with the analyst citing deteriorating brand momentum. Price target now $23, and shares fell 4% today to $24.94. Altria was downgraded to underweight from equal weight at Morgan Stanley. The analyst cited declining cigarette sales and increased scrutiny from the FDA when it comes to vaping. Price target now $45, and that stock dropped nearly 7% today to $44.97.
Coming up, a turning point. After a rough few years, are things finally working in IBM's favor?
Johnson & Johnson said today it expects sales growth to slow this year. The Dow component blamed generic drug competition and pricing pressures, but J&J did report better than expected earnings for the most recent quarter, thanks to sales of its cancer drugs and its psoriasis treatment.
We have about $3 to $3.5 billion of generic and biosimilar competition that we'll encounter this year, yet we're still able to talk about growth. Most companies would be talking about contraction, or the dialogue would be, when are we going to return to growth? We are still going to grow.
Shares of J&J fell 1.5% in today's trade.
Fellow Dow component Travelers reported better than expected quarterly profit thanks to growth in premiums. That helped offset catastrophe losses related to the California wildfires. In 2017, Travelers began restricting its underwriting of new business in California due to wildfire risk. The stock was down about 1% to $122.36.
Well, it was a big quarter for Big Blue. After the bell tonight, IBM reported better than expected earnings and revenue and said that it sees profit growth this year. Here were the numbers they issued. IBM earned $4.87. That was 5 cents better than expectations. Revenue declined, but it did top forecasts at $21 billion. And the CFO says that the quarter was driven by its cloud and services businesses.
We actually continued to accelerate our services base of business, led by strong growth in GBS, capitalizing on digital, cognitive, and cloud. And in our GTS book of business, we actually had the strongest signings quarter that we've had in well over many years.
And investors cheered, sending shares of the Dow component initially higher in an after-hours trade tonight. Deirdre Bosa has more.
Despite a better than expected report, IBM's revenue rebound didn't last long. The company is still struggling to shift its business toward higher margin next generation technologies like its Watson artificial intelligence and cloud computing, a unit that IBM calls strategic imperatives. Its legacy business, hardware and software, continued to weigh on its turnaround and the company's stock price. A few months ago, IBM agreed to buy software and services company Red Hat to boost its cloud business. That could boost sales when the deal closes. But investors will be looking to the company to deliver on organic growth this year as well. For Nightly Business Report, I'm Deirdre Bosa, San Francisco.
Let's turn now to David Yepes for more on IBM's earnings beat. He is the senior analyst, investment analyst with Essential Wealth Advisors. Nice to see you again, David. Welcome back.
Thank you for having me.
You were looking for growth in cloud. That was very important to you. They did report some growth. Was it enough?
Well, I think it's a good step in the right direction. You know, we continue to believe that they're going to have to transition more clients to the cloud. And so it's still early stages, but I think it's positive for them.
Now, it seems that all you had to do was mention you were getting into the cloud business, and your company would be viewed much better on Wall Street. I think of an Amazon. I think of a Microsoft. IBM is hanging their hat literally on Red Hat. They made that acquisition to get more into the cloud business. But you're worried about that acquisition, aren't you?
Well, you know, it's a big acquisition for them. I think that they're going to have to be careful and be able to transition all the customers from Red Hat towards the IBM cloud. And so they're going to have to be careful also to keep all their employees there as well. So I think it's going to take some time. You know, they're going to have to close the acquisition by the end of the year. So we're going to wait and see what happens.
You have the stock as a hold. Was there anything in tonight's report that would change your mind on that?
Well, again, it's a right step in the right direction. So, you know, I think the company is starting to execute in some of their priorities. And so they have good free cash flow that they can use for, you know, to buy back their stocks at these prices. So it's a right step in the right direction, but we still have a hold on it. We want to see what happens in the next couple of quarters.
You know, we don't often talk about some of their legacy businesses like servers and things. Is that because it's not a growth area anymore, or how are they doing there?
Yeah, they continue to lose business in that area, and so that's why they're doing this Red Hat acquisition, because they want to transition some of their customers to the cloud. And so they want to make sure that they have a strong cloud that is very secure, that customers feel that they are very secure on it. And so I think they're trying to do that, get away from that traditional business and try to go to the cloud.
You know, it's been 6 years since IBM and Ginni Rometty has really made an effort to turn that company around. How do you think is she doing the right things by focusing on the cloud and Red Hat? Is there anything you'd like to see her do differently?
You know, I think she's doing the right things in terms of the strategy. You know, the cloud is the fastest growing area in the business. You know, a few years ago, Jeff Bezos said that the cloud was, you know, worth trillions of dollars. So, you know, everybody wants to be there, and they need to have a strong foot in that area. And so that will be one area that will focus on security and AI. They're working on that with the Watson cloud. And so they're trying to actually get customers to do better solutions on financial services and healthcare. So that's another area that they have opportunity, artificial intelligence. So, you know, they're focusing on the right things. It's just, you just have to give it a little bit more time.
On that note, David Yepes with Essential Wealth Advisors. Thanks.
Thank you for having me.
An activist investor calls for urgent changes at eBay. And that's where we begin tonight's Market Focus with Elliott Management pushing for eBay to restructure and sell some business units. The investment firm said this will allow eBay to double its market value over the next 2 years. The hedge fund has a 4% stake in that company right now. The stock climbed by 6% to $32.90. Halliburton is forecasting lower revenue in key businesses. The company says that some North American clients are pulling back on drilling services amid transportation bottlenecks in the largest production region. That overshadowed better than expected earnings in the most recent quarter and a pledge to reduce 2019 spending. Shares fell by 3% today to 31.26. And Arconic says it is now no longer pursuing a sale. The metal manufacturing company had reportedly put itself on the block last summer, and there were those reports that Apollo Global Management was a leading bidder and that a deal was imminent. Not happening, apparently. Shares dropped by 16% to $17.09.
Stanley Black & Decker topped Wall Street earnings and revenue forecasts, but its outlook was gloomy. The tools maker cited slowing global economic growth that led the company to reduce its sales guidance. It also plans to make digital moves, which it says will increase efficiency. But the stock fell more than 15% to $115.69. UBS missed analyst estimates for its fourth quarter. The Switzerland-based bank warned of a tough start to the year, citing trade disputes and unresolved geopolitical tensions. The stock fell nearly 5% to $12.94.
Coming up, the growing headaches for those running the airlines.
A French regulator has hit Google with a $57 million fine for violating European privacy rules. The ruling stems from complaints that the company did not go far enough to get users to consent data gathering for advertising. Separately, the European Union fined MasterCard $650 million for breaching antitrust rules. The regulator says the company raised payment processing fees, leading to higher prices for retailers and consumers. The penalty follows a 6-year investigation.
Bail for former Nissan CEO Carlos Ghosn has been denied again. This is the second time in a week that he has lost that court fight. In his latest petition, Ghosn offered to pay a higher amount and to put up his Nissan stock as collateral, as well as to surrender his passports. But this latest decision means he will likely remain in detention until at least early March.
And now to the partial government shutdown, which is in day 32, and there is a little bit of movement. The Senate has scheduled votes on Thursday on competing proposals that would reopen the government. One vote would be on President Trump's plan that includes money for a border wall. The second measure would fund various agencies until February 8th, but it does not include border wall money.
And 1 month into the government shutdown, the airline industry is feeling the impact. Unpaid TSA agents are increasingly not coming to work, and some airlines are waiting for government approval on new flights. Phil LeBeau has more on the industry in a holding pattern.
The lines are getting longer, the frustration is growing. With the government shutdown dragging on, TSA workers are approaching a second payday where they won't get paid. So a growing number of agents are not showing up for their shifts, more than 10% over the weekend. While Washington won't budge, the airlines are waiting for key government approvals. Take Delta. Its newest plane, the Airbus A220, scheduled to start flying January 31st. But with many in the FAA furloughed, the agency has not approved the plane for commercial service, leaving Delta CEO to wonder when the shutdown will end.
We encourage our elected officials to do their very best to resolve these differences as quickly as possible. We're not taking sides on the debate, but we need to get the business moving again.
For Southwest Airlines, the government shutdown means it cannot begin flying to Hawaii. The FAA must approve all planes making extended flights over bodies of water. So until that happens, Southwest is holding off on selling tickets and beginning flights to the islands. A huge moment for the airline. Meanwhile, Alaska Airlines is delaying new service to Painfield just north of Seattle. Payne Field, which is used by Boeing to deliver new airplanes, was supposed to start handling Alaska's flights in early March. But the airline is putting those plans on hold while it waits for the required government approvals. As frustrating as this is for the airlines, the TSA, and others in the industry, the good news is this government shutdown has had a limited impact on demand. For the most part, bookings remain solid. But if the TSA security lines get longer and more travelers get frustrated, then we could see the airlines start to pay a bigger price. Phil LeBeau, Nightly Business Report, Chicago.
Here's a look at the final numbers from Wall Street. The Dow fell 301 points. The Nasdaq dropped 136. S&P 500 was off 37.
And finally tonight, we're celebrating a major milestone around here. Today is the 40th anniversary of the Nightly Business Report. It debuted back January 22nd of 1979 with original anchors Linda O'Brien and Del Frank and the great Paul Kangas. And today, PBS station WPBT in South Florida, where the show first originated, presented the first Paul Kangas Innovation Award to famed economist and former NBR commentator Arthur Laffer, an old friend. And there's Linda. She was on hand to present the award. We proudly congratulate all who have been a part of the NBR family these past 40 years. And I know you and I and our team are part of that tradition, and very proudly so.
Absolutely. We are privileged to be hosting this program. That does it for us tonight on NBR. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.